this week's edition of Beyond Wall Street, the show that's committed to helping take the mystery out of Wall Street and help it make sense on your street. I'm your host, Kristen Oakley, and I'm here with Kenny Porter. He is the president of Kenneth Porter and Company. Kenny, it's always a joy to be in the studio with you.
Yeah, Kristen, nice to see you.
Oh, it's great
Thanks
to
for
see you
hosting.
as well. Absolutely. And I know one of the things that I love about your story is your passion for those who serve in the military, and a lot of that stems from your own military experience. So I was wondering if you could share, some of our viewers might be newer to you, a little bit about your background with that.
Yeah, so I started out a Marine, served in the Marine Corps for almost 10 years. And during that experience, I was in a position where I was providing physical security for naval installations and compounds all across the world. And what's interesting about that is during that time that I was serving, I never thought I would be in the financial business. It kind of ended in a mistake.
See, those are the best kind of mistakes.
Yeah, it was the best mistake
right?
that ever happened 27 years ago. So what ended up happening is that I got an opportunity to leave the Marine Corps and go to work for the railway. And those of us in Virginia Beach, Hampton Roads, know Norfolk Southern.
Right.
Norfolk Southern hadn't had a lot of popularity in the news lately with some train derailments, but great company. And I got hired to go to work for their police department because of my military experience. So I leave the Marine Corps to take this job opportunity. And as quickly as the job opportunity was given to me, there was a rift. There was a reduction in force for the railway.
Yeah.
So I was the new guy on the block, low seniority.
Right.
And so before I could even spend the first day with the railway, I lost my job.
Last in, first out, right?
Last in, first out.
Financial
Exactly
joke, if you know, you know. Yeah.
So what happened from there was I was on this panic job search. I had 3 kids at the time, 5 now, 6 grandchildren. Shout out to Kathleen. Yeah, and the panic set in that, oh my gosh, I've got to have a job. I've got to be able to provide for my family.
Right.
And my father-in-law happened to share with me that there was a firm in Virginia Beach that was hiring veterans. And this gentleman, one of my early mentors, gave me the opportunity to go to work for this financial planning firm, and they trained me, sent me back through the schooling. So I tell folks that I went from a position of physical security to fiscal security, and have been serving clients in Hampton Roads and throughout America for now going on 27 years.
That's amazing. Well, thank you for your service, both to our country and to
They
clients
paid
every
me to
day.
do it, so
I know, but still, it's a family sacrifice. Coming from a naval family, I can fully appreciate that, and I know our viewers do too.
Well, thanks for saying that.
Absolutely. Well, speaking of your career path and your journey, it's so fascinating because retirement has changed. The whole landscape of retirement has changed. We often say it's not your parents or even your grandparents' retirement anymore. And today's modern retiree are, they're facing so many more challenges than previous generations have. It used to be you worked for the same company for 40 years, or you served for X amount of time. You would then retire with, sometimes a good watch, a pension. All that has gone away, and really the burden is on us. And in fact, according to Forbes magazine, there are now 4 economic headwinds that today's retiree faces. So I want to unpack this a little bit because we're all about that on this show, right? Taking the mystery out of Wall Street, helping it make sense for our viewers on their street. And that first economic headwind is market volatility. So let's start there. There's so much to unpack, but whatever direction you want to take that, because it's such a loaded subject, what do our viewers need to know about it?
So viewers today can relate and empathize with all of us are facing uncertain times in our financial markets. We're seeing banking crisis, we're seeing financial crisis among very big publicly traded companies. We're seeing that citizens are having pressure put on them with financial markets, and there's uncertainty. And then that uncertainty can sometimes create panic, where folks make decisions based on emotion versus logic. And market volatility can create that uncertainty in a way where what we want to focus on is the timing and sequence of how you take distributions in a retirement distribution phase, especially when there's significant potential for market volatility. We can probably go back, Kristen, to as early as the dot-com bubble burst, the 2000s. And so in the early 2000s, from 2000 to 2002, we lost almost 50% of our market value over those 3 years.
Right.
What's interesting is that if you retired during that period and you started out with those 3 years of negative downturn in the market, you had a high probability of having to go back to work. And there's a story I'd like to share with you. The gentleman who came to me years ago in one of our workshops that we do locally, and he was a Verizon telephone executive, had a great career and had amassed over $5 million in his retirement account. So he felt really confident to be able to retire. What was interesting is that he had a pretty high cost of living. He was taking care of a lot of family members. They loved to travel, which are all the things that we aspire and want to do in retirement. But what was interesting is that when he retired, the timing of his retirement was not so good. See, he retired in 1999 when the market was at its peak.
Right.
He started the distributions on his 401k plan
Yep.
at the beginning of the lost decade. And Forbes has talked about this lost decade that we're facing now.
Right.
It reminds me so much of that lost decade of 2000 to 2009. The S&P 500 during that period had a negative loss compounded of about 0.95%. But when we look at 2000 to 2002, 50% of the market value has gone there.
Right.
We were lulled to sleep with a recovery. And then we had the Great Recession of 2008, where the markets gave back 37% of their value.
Right.
And if you retired during that phase, you had significant losses. And again, it's losses that are unnecessary. And with this gentleman I was sharing with, the Verizon executive, he went from over $5 million in his portfolio that by the end of that decade, when we finally got hold of the account, we were working with an account with less than $2.5 million left in it.
Wow. Can you imagine how devastating?
The devastating thing for him is that he went back to work because of the fear that that market consequence put into him.
Right.
And again, we go back to, we want our clients to take the ability to take the emotion off the table and use logic. That's really hard when you're in it and it's your money.
Oh, for sure. It's your hard-earned money.
That's right. And so we want to create an environment where we can help clients understand the consequences of their financial decisions. And by doing so, we can look at strategies that can be used to minimize and mitigate when these markets have downturns. It's not if we see a downturn, it's when is it going to happen?
Right.
And because we don't have the crystal ball to tell you when it's going to happen, we can just use some indicators to maybe have an educated guess. But not knowing is part of what we have to work through, is turn an unknown into a known.
Right, for sure, because no one has a crystal ball.
That's right.
Nobody knows what's going to happen, but history often does repeat itself. We've talked about that on a previous show. And so I know one of your passions is helping folks prepare for the unexpected.
That's right.
So for our viewers at home today, would you mind sharing the special offer that you've put together for them?
Yeah, so what we would like to offer you today is an opportunity to look at all of your positions that you hold, all of your assets that you hold. And we would love to give you a complimentary review and portfolio analysis to be able to look at if these sequence of returns risk could potentially plague your portfolio. So we'd love to give you an opportunity. All you need to do is dial 844-575-8071 and speak with our team, and they will schedule a time to have this complimentary review with no obligation, but just to be able to get a second opinion. And you know, I like to say, you cannot get a second opinion from the first person that gave it to you.
That is
So
true.
we want to give you the opportunity to get that second opinion to see if we can right the ship for your investment strategies.
Awesome. Kenny, thank you so much. To our viewers at home, again, that number to call is on the bottom of your screen. Simply call 844-575-8071 to get your complimentary portfolio review from Kenny and his team. We've covered the first major economic headwind that today's retirees are facing. We have 3 more to cover. Stay with us.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to this week's edition of Beyond Wall Street. I'm your host, Kristen Oakley. I'm here with Kenny Porter. He is the president of Kenneth Porter and Company. Kenny, we're talking today about the 4 major economic headwinds that today's modern retiree faces. And before the break, we were talking about market volatility. I want to switch gears now and talk about inflation. Now, this is something that's on the top of everyone's minds. All you need to do is go to the grocery store and try to buy what? Eggs, bread, milk, and it's going to smack you in the face.
Right.
So specifically for retirees, what do they need to understand about inflation and how to protect themselves against that risk in retirement?
Yeah. So in our town, we know this word stealth, right? In Virginia Beach, we're very familiar in our military community that to be stealthy is a good thing.
Right.
When it comes to inflation, stealth is a stealth tax that can erode wealth with, again, unintended consequences. And you know, inflation, if we look at it over the last 100 years, has averaged about 3.8%. And we've been able to have investments help offset that risk.
Right.
Now, as we've faced these headwinds of the last 2 years, 3 years, we've seen gas prices skyrocket. We've seen our housing costs skyrocket.
Yes.
We've seen our produce to our meats at the grocery store. I like to share the story of every Saturday there's a custom in our household where we're going to have bacon and eggs.
Oh, yes. That's a good Saturday morning
good
breakfast.
Southern breakfast, right?
Yes.
Well, the bacon, the packaging has shrunk. And I have this bacon, Bright's bacon, that's my favorite.
Okay.
But we went from 3 pounds to 1.5 pounds. And when you have 5 kids, 6 grandkids, you need 3 pounds of bacon, right?
Right.
But that 3 pounds of bacon got cut in half to 1.5 pounds. And the price went from $10 to $16
Holy moly.
for that package of bacon. And, you know, that meets us on the everyday street of American consumers where your retirement dollars has a squeeze put on them. And so what we have to do is figure out how do we safely spend in retirement. And there are strategies that can be deployed where we can use sometimes what's called a concept of a split annuity strategy.
Okay.
The split annuity strategy is where we can take an asset and spend down one portion of the portfolio, spend principal and interest. And if we're spending principal and interest, that means we can get a higher net income on our cash flows.
Right.
But while we're spending down one side of our financial position, there's the other side, the other pot of money is growing.
Right.
And if we don't interrupt the market opportunities, and if we don't interrupt it with market volatility and we don't interrupt it with taking distributions, we can see the opportunity that we have the advantage to let the account grow and grow efficiently without that additional lag on wealth or that headwind on wealth called inflation and distributions.
Well, and I think what's so scary about inflation that a lot of folks don't realize is that it causes you have to double your money. So when inflation was that all-time, historical low of around 3%, right? It would took 24 years before you were going to need twice as much money.
At 3%.
At 3%.
Yeah.
So now when we think about inflation being upwards of over 8%, that timeline has shortened to what now?
Yeah, so when you think about inflation at, say, a 6% rate, it will take you, or you will need to have doubled your money in 12 years. So if you're taking, $3,000 a month of cash flow from your investments, by year 12, if we're pacing at 6%, you got to now take $6,000 just to meet that same standard of living.
To buy the same amount of goods and services
Same
that
amount
you're
of goods and
buying
services,
today.
exactly
Yeah.
right. And that's a headwind that's hard to overcome unless you have a strategy.
Right.
And unless you have a plan to be able to distribute money both at a principal and interest basis to offset inflation or
Right.
the stealth tax.
Yeah, wow. It's sneaky, right? Stealth
Very.
is a good word for it,
Right.
for sure. Well, that brings us to the next economic headwind, which also starts with I, so interest rates. So
Yeah.
talk to us about that, because last year, 2022, was a very fascinating year in the markets of usually there's an inverse relationship between stocks and bonds, but what happened last year?
Yeah, so last year we started seeing the federal government go on a campaign of quantitative tightening. And basically what that means is that they're trying to take cash out of the market, and they want to put a squeeze on spending. And so the way you do that is to increase interest rates.
Right.
And so we've seen that have an effect on everything from our car purchases. I was talking with a client just about a week and a half ago, and this client said they were ordering a new vehicle and they were interested in maybe financing it versus paying cash for it. Just 2 years ago, they could finance this car for less than 1%.
Right.
That same car today, Kristen, has a 7% cost
Phew. Wow.
for 60 months. And so what we're seeing is that payments are doubling and tripling in some cases.
Right.
And that means, again, there's a greater drag on wealth. So we have to be able to combat interest rate hikes, and we have to plan as if interest rates are going to continue to go up, because the Fed keeps hinting that that's a possibility.
Yes, the Fed is not our friend in that department.
In that
right?
department, they are not right now. And so that puts, again, pressures on your bonds. It puts pressures on the investment markets. It puts pressures on new capital coming into the market. So you have to have a strategy that's very similar to one of my favorite investors of all times, a guy named Ray Dalio. And Ray Dalio talks about having an all-weather portfolio. So in our firm, we really like to be product agnostic. And we like to look at, well, what's your process of wealth creation? And understanding your process can then hone us in onto what type of products you need to own in your overall plan. And we can help you do that with our complimentary financial review. And we would love to share that with you today. If you would love to have the opportunity, we would love to have the opportunity for you to take us up on our complimentary offer. All you need to do is dial 844-575-8071, and we'll provide you with that complimentary financial review.
Awesome. Kenny, thank you so much. To our viewers at home, again, that number to call to get your complimentary portfolio analysis is on the bottom of your screen, that complimentary portfolio review. You're also welcome to take out your smartphone. Simply scan that QR code in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few simple questions, and then a member of Kenny's team will reach out to you and get you connected to come in that way as well. We have another important economic headwind that today's modern retiree is facing, so stay with us and see how you can protect yourself against the challenges that retirees face. We'll be right back.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Beyond Wall Street. I'm Kristen Oakley here with Kenny Porter, president of Kenneth Porter and Company. And Kenny, a great show we're having today. We've been talking about the 4 major economic headwinds that today's modern retiree faces. Of course, Forbes magazine recently highlighted these. So we've talked about market volatility. We've talked about inflation. We've talked about interest rates. That 4th one, it's a very interesting one, but a very important one, legislative risk. So talk to us about that.
So with legislative risk, we really have to consider what we believe the federal government's going to do with income tax. And over the last 27 years, I've interviewed clients over and over again, and most consumers believe and have this preconceived notion that when they retire, they're going to retire in a lower tax bracket. And what's happened is that I think consumers have been lulled to sleep into that belief system. What I have found to be true is that after interviewing hundreds and actually thousands of clients over the years, I have found that those who did a great job of preparing for retirement, those who saved appropriately, found themselves in a position where they were not in a lower bracket. At best, they were in the same bracket that they were in their wage earning years.
Wow.
And so with legislative risk, we have the situation where the government controls 100% of our retirement accounts.
Right.
Retirement accounts being IRAs,
Yes.
401ks, 403bs, TSP.
Which is, a lot of people don't realize that, because this is a tragic thing when people are like, oh yay, I've saved up, let's say $1 million for retirement, I'm going to be fine. But you have a partner, and who is that partner?
Yeah, your partner is Uncle Sam. And Uncle Sam has a great need right now for income. If we look at what's going on in our world, we've seen massive spending.
Yep.
This year we're on track for $2 trillion of additional spending, more than what we're taking in.
Right.
And so that creates a headwind, and it creates what we call the tax train. So we've got this tax train barreling down on us.
Right.
And there's a simple method. Get off the track, get out of the way of the barreling down tax train. And some of the things that you have to do with these legislative risks, and that's the potential of income taxes going up in the future. And if income taxes have the propensity to go up, that means that all of those dollars inside your retirement accounts are at risk of being taxed at a much higher rate than what you're currently at. So we use, in our previous segments, we talked about our tax map.
Yes, and I know that's something you're so passionate about, is
Yeah.
helping folks engage in strategic tax planning for retirement.
That's exactly right. So when we look at these four headwinds, the greatest eroding factor to your wealth out of all of those is income tax. And so there's something we can do about that. And that is that we can create an income stream that takes into consideration income tax during that important distribution phase. And so what we want to do is offer to our listeners today is an opportunity to take advantage of our planning and use this complimentary report where we can share with you the legislative risks, the interest rate risks, the market volatility, and put yourself in a position of defending against those eroding factors of wealth. And we do that with this complimentary review. So if you'd like to take us up on that, you can reach out to us at 844-575-8071, and we'll give you the opportunity to come in and have a conversation with me and my team about how we can mitigate that in your plan.
And I love that you say that you help to steer and navigate that ship in the right direction, right? Harking back to military
Those military
analogies.
days, yeah, I
It's
can't
so
get away from
important.
it.
No, but it applies. It applies,
Yeah.
absolutely. I'm curious, because you mentioned something really powerful earlier, and that is that you advise people to get a second opinion, because you can't get a second opinion from the person who gave you the first.
That's right.
So I'm really curious, when folks come in and they take advantage of this complimentary portfolio review and they meet with you, and let's say they're already working with another financial advisor, but they're coming in for that second opinion. Talk to me about how that conversation goes. Do you typically find areas that maybe they haven't even thought about, or maybe their current advisor hasn't even talked to them about? Or if you see someone who's on track, are you going to encourage them to keep doing what they're doing? Talk to me a little bit about what the second opinion appointment looks like.
Yeah, thanks for that question. Our process is that we do an intake exam. It's kind of like going to the doctor.
Okay.
You go to the doctor and you've got to answer this questionnaire. So we have a standard questionnaire that we give out to our clients or to our prospects, and we give them the opportunity to share with us where and how they've put money to work in their current position, what we call the current financial position. We then go through a simple process of just asking you questions about that. The who, the what, the when, the where, the why. And from that, we can really take the position of understanding your point of view, your financial point of view, your financial philosophy, and being able to navigate through those questions in a way that you have discovery and you have understanding about how these current legislative risks, inflation risk, credit risk, volatility in the market, we can really get an overview to understand your point of view and what concerns you have for your retirement distribution plan through this questionnaire phase, or what we like to refer to as our discovery phase. And in that discovery, we're going to help you navigate through a written financial plan that we use a team approach. We have a team of certified professionals that we can lean on to help navigate through a written financial plan for our clients.
Well, then if someone comes in and they're on track, how does that go? Like, let's say that you're like, you know what, you're in good shape. What does the conversation turn into?
You know what, if you're happy and things are going well, we'll tell you that. You'll discover that.
Right.
But if there are needs that there needs to be change, we're going to have a conversation about that. And there's the old book, Who Moved My Cheese?
Yes.
Right? So you have to be comfortable that if the position you're in now is not in your best interest to stay in that position, then you may have to deal with change.
Right.
And we like to think that we take the emotion off the table and we bring financial logic to the table for
and the
our
facts,
clients.
right?
The
You're
facts.
able to do that full analysis to be able to say this is where you're currently at, right?
And discovering that together, we have the opportunity to give that second opinion. And again, as you said earlier, you can't get that second opinion from the first person that gave it to you.
Right.
So give us that opportunity and we'll do that on a complimentary basis for you.
Absolutely. And I love that you're able to do that from being an independent financial advisor.
That's right.
That you're not bound to having to put people or pigeonhole people. Like, you're
Not at
able
all.
to do this very customized, individualized plan.
Right, absolutely. And that's the beauty of it, is that we're going to approach this from an agnostic point of view, a financial agnostic point of view.
Right.
That it's not about the product, it's about the process of wealth creation. And the process that we use, we'll talk about in a later show, but it helps us understand how to get from where we are to where we want to be in the most efficient and effective manner possible.
Wonderful. Kenny, thank you so much. To our viewers at home, again, that number to call to get your complimentary portfolio review is on the bottom of your screen. Simply call 844-575-8071, or you can scan that QR code that will get you connected to Kenny and his team as well. But we encourage you, take advantage of this opportunity for no cost, no charge, no obligation, just simply an invitation to have a conversation to see how Kenny and his team can help you. Thanks so much for watching. We'll see you next week.